Hey, what's up guys? I'm Cody Charnell, multifamily real estate broker here in Long Beach. And today we're going to be checking out a recently closed duplex. So if you're in the market for a duplex, this is a video that you're going to want to watch. Just a little disclosure, I was not involved in this transaction. So this is just a video to show you what's happening in the market, give you a little bit of an idea on duplex pricing and how I would analyze a duplex. So hopefully you get some value out of this. If you do, please throw me a like and subscribe. And without further ado, let's get into it. Okay, so let's start off with the location. So the property address here is 224 West 14th Street. This is it. If we zoom out, we can see it's located in a neighborhood called Washington. So Washington basically stretches from the river here all the way down Anaheim to Long Beach Boulevard, which has the metro line, so you can take the train up into LA or all throughout LA. It comes up to PCH, so PCH is this yellow line, and then back down the river. So really this rectangle here. The property itself is located on 14th, which is a street with kind of this green belt looking park here. So we'll talk a little bit more about that in a second. The neighborhood, Washington is one of the most affordable neighborhoods in Long Beach. So you can kind of see what's going on here. So basically from Magnolia over to the river. So this section of Washington, this is all going to be industrial. So you have a lot of warehouses, a lot of manufacturing industry, that kind of thing in this neighborhood. So location-wise, you're close to Long Beach Poly. You're close to the Wrigley neighborhood, which is a nicer residential area as you get further north. And you're not too far from downtown Long Beach. So you do have fairly easy access to shopping and entertainment here. You can definitely ride the train down into downtown Long Beach, or you could walk if you wanted to. It's not a crazy distance. If we look at the property on street view, like I mentioned, this is a duplex. So here we go. We can get a good idea of the layout. So what we have here is a two-bed house in the front. And then in the back, we have a second structure with another two-bed unit upstairs. And then we have two one-car garages. Looks like somebody's doing some mechanic work, but overall, a pretty good layout for a duplex. Having detached units will help you get more premium rents. So tenants will pay more for a unit that doesn't have any shared walls. Also, something that I really like about this property is the configuration of the garages. So for somebody who wanted to maybe do an ADU conversion, I think this setup is pretty ideal because you have an already livable unit upstairs, which has electrical, it has plumbing, it has drain lines, it has everything that a unit needs. And all of those utilities are running down through the walls of the garage. So if you're going to build an ADU, building it in a garage like this and not having to trench all the way out to, let's say, like a detached garage, this seems like a fairly easy conversion to me. One thing you do have to watch out for is ceiling height. So ceiling height in garages is sometimes too low. And in this case, you wouldn't be able to increase the ceiling height. So I think you have to have a minimum of 7 feet, 8 inches, I think is what it is. So something to look out for there. But if the ceiling is high enough, I think this is a great configuration for an ADU. And then if we go to back to the front, so we can see kind of a cool craftsman style house. And it is located on this street with this green belt. So I think the green belt has improved. This used to be kind of a rough neighborhood because homeless would hang out here, but it looks like it's cleaned up quite a bit. So yeah, overall, not a terrible street. The listing also did mention that the owner has spent some money on upgrades. So they've changed out quite a few of the windows. So I think these ones in the front are vinyl windows, and I think I spotted these ones look like they're original. but these look like newer vinyl windows. So a lot of those have been changed out. You also have upgrades to the electrical in both units and copper plumbing in both units. So those are major capital expenditure items that have already been taken care of. So a new owner wouldn't have to worry about those. The kitchen in this back unit has been renovated. Okay, so yeah, the kitchen in this back unit has been renovated also. And as far as size of these units go, on the listing, it said the total size of the property was 1,654 square feet. So the tax records show that the front unit here, this house, is 2 bed, 1 bath, and it's 950 square feet. So that means this back unit is about 704 square feet. All right, so here's my pro forma for this property. So as I mentioned, address 224 West 14th Street. Asking price was $699,000. So the buyer on this one was able to negotiate a decent sized discount of about $40,000. Here you can see the total square footage that we went through. So 1654. The lot is about 3,100 square feet. And this is going to be 1919 construction. So older property here, but a lot of those major systems have been upgraded. Like I mentioned, they did some windows, they've done electrical in both units, and they've done supply lines. So they put copper plumbing in both units. The way this pro forma is laid out is we're going to say 25% down payment at a 6.5% interest rate, which is close to the interest rate that you would get if you were going to own or occupy this property. So you can see current rents are here. So $1,520 for the front house, $1,450 for the back unit over the garages. Those are our current rents. And then for market rents, we have $2,400 for that front house and $2,050 for that back unit. We're also going to say that you can get $100 per garage to rent, and you can rent those out for extra. So it should be totally attainable to do that. Parking is pretty tight in this neighborhood, so people will pay extra for garages. Here we are at the summary tab, so you can get an idea of metrics on this property. So based on the current rents, which are very low, you're looking at about 18.5 times gross. And then once you get rents up to market price, this property will operate closer to 11.8 times gross. So that's 50% upside in rents. And I gotta say, 11.8 times gross is a great number for a duplex. It's difficult to get any duplex to operate on around 11 times gross. So I think pricing on this one is great relative to the income. And let's scroll down here to the kind of cash flow section. So if we look at the numbers on this, so with current rents, you're bringing in about $2,970 a month. That works out to $35,000 a year. So if we look at this conservatively and we have a 3% vacancy expense, then we also take out just our normal expenses here. So this includes property management, it includes repairs and maintenance. And then we also take out our debt service. So that's mortgage payments. So annual mortgage payments about $37,500. The property is negatively cash flowing. So whoever buys this, I think the play will be to renovate it and get rents up to market price as quickly as possible if they're going to do this 25% down. If, let's say, you planned on owner occupying this, and we look at the numbers a little less conservatively, so we'll take out the vacancy expense for our market rent section, assuming we're going to move into one of the units. We'll also take out the property management expense. So we can manage this ourselves. So now you can move into this and you'd be cash flowing $3,200 a year. So how much is that a month? So roughly $270 a month. So you could live here. Let's say you wanted to live in the smaller of the two units, and your monthly rent would be about $1,780 just to get the property to basically break even. So I really like this one. It's tough to find a duplex that would break even or cash flow based on market rents with a 25% down payment. Most of the time, you're gonna have to put more money than that down. Most investors don't look at duplexes for that reason. So most duplexes do sell to kind of the owner-occupied buyers or investors who are going to take it an extra step and maybe do ADUs. So the numbers on this one look really good. I did mention the ADU earlier, so let's see what that would look like. If you were to convert the garages into an ADU, and let's say you rent it out as a 1 bed, 1 bath for $1,700 a month, and then we'll take away the garage income since we won't have garages anymore. This would be cash flowing really well. So you could make as much as $20,000 a year in cash flow if this was a 3-unit property. That works out to about $1,700 a month. So overall, I think this is a great option for a duplex. I'd love to hear what you guys think about this one in the comments. Is this a property that you would have invested in? Would you do the ADU? So yeah, if you got any value out of this video, I would appreciate it if you could leave me a like. And yeah, I'm trying to put out one of these videos per week. So if you have any properties you'd like me to analyze, please feel free to send them my way. And yeah, thanks so much for watching. And remember, invest well, trust Cody Charnell.